I'm Scott Al Miller. It's the 16th of August, 2023. This is my vlog of daily life living in Nicaragua. Today we're going to actually be talking about something quite different, and we're going to be addressing a viewpoint of why the world doesn't understand America and why Americans don't understand the world because of blind capitalism. We're going to get to what that is in just a little bit. But first, we're going to do the bump, and then we're going to do a little bit of talking about my custom shoes and customization of my suit that we're having done here for a wedding we have coming up in Managua in just about a week. We're going to get to all that right after the bump. All right, so a week ago we went to the Masaya, went to the market there, found a cobbler, and for the first time ever in my life I had custom shoes made. This is really interesting because just the entire experience is very different. The upside was finding the cobbler and dealing with that was very easy. Getting the shoes made was very easy. They didn't give us a receipt, but he's like, there's no way I'm going to forget you, and he didn't. The cost of the shoes was about $45. These are dress shoes made from leather, and this is scratch built, every single thing made by hand. I had to go there and get measured because obviously they're custom making shoes, so they're exactly custom to my feet. And this morning, I'm actually recording this in the future, but on the day that I'm recording this, which is actually Tuesday, Paul and Dominica ran to Masaya, which is over 2 hours away from here in Leon, and picked up the shoes and brought them back. So about 4.5 hours of total round trip driving. The instant Dominica picked up the shoes, she said, these are definitely not for Scott's feet, but there's nothing else to be done. There are no, we said about this earlier, my feet are a size 14. Technically, I could get away with a 13.5, but I'm a 14. I wear 14s all the time. If you put insoles in them, 14s are correct, but a 13.5 I can wear without an insole. But most of the time you want an insole, so maybe I'm 13 3/4, something like that. Anyway, if I have a 13, I can put my foot into it, but it hurts. It will hurt me after about 30 minutes of walking, but I could do it if I have to. So we got the shoes. They brought them back. I did not go because I had lots of work I had to do today, so I stayed here at the house and took care of a lot of things. It's a good thing I stayed because the day was absolutely nuts. I never got a chance to walk away from my desk, and not because work was like so much work. It was because every time I got to my desk, someone different needed something completely different from me, mostly around the house, not from the office. There are a few things at the office for sure, but mostly just around the house. So there's this huge amount of coordination just going through my office all day. And so really good thing that I was here. Also, we managed to get my third quilt hung in the office, which I will show shortly. So I now have two brightly colored ones, and Liesel donated hers to my office wall project. Hers is much more dark and moody, but it's been that they've been in closets and, you just wherever. Now they're somewhere safe, but that they can be seen all the time, so they'll be on video. So that's really nice, because one of the problems that we have with quilts, for example, Dominica and I have a wedding quilt that we got 20 years ago in a few weeks, and that quilt rarely gets seen. We did hang it up depending on where we lived over the years, but it's been many years since it was out on display, and now it's in a storage unit, so even if we want to display it, which we do, we can't. And we also have, and this is very old, 8 years ago, we bought a tapestry, and we have nowhere to put it because it's in storage. So those are some things we want to get here and have hung up and decorate with them, and that'll be really cool. But so these I was able to put in my office, and now they're on display. These are much newer. So that was done today. So they brought back the shoes, and I tried them on, and they are so many sizes smaller than my foot. They are narrower than my feet. They are shorter than my feet. My toes completely, and remember, I broke my foot last year, so I can't be pushing it, right? I should have plenty of extra space. All shoes should have plenty of extra space. You should never be in a spot where you're doing bone damage by wearing a shoe, but generally, you can get away with quite a bit. It's not like long-term foot binding. It's just an uncomfortable day. But with a broken foot, I cannot push it at all. These are shoes I cannot actually stand up in if I put them on. My toes curl under. They're about half an inch short of the actual length of my toe. And as people who work in shoe stores have told me, there should be about a thumb width between the end of your toe and the end of your shoe. Not quite that much, a little bit less, but that's kind of a guide, right? There should be space because that's what keeps your feet safe. That's what keeps your toes protected. They should not be up against the surfaces. But if they're up against the surfaces, that's okay, as long as they're not pressed against the surfaces, just touching the surfaces, that's okay, and I can do that, but that would be a 13. These shoes are probably more like an 11, maybe an 11 and a half. That's a far cry from the 14 that I'm supposed to have. That is a major problem. I cannot wear the shoes. They're beautiful. They look really good. He did a really nice job of the construction. The materials seem really nice. We're going to have to donate them because there is no way I can ever use it. It's not like getting a shirt that's too small and going, well, I guess I'm going to go on a diet because I want to wear this shirt. I can never make my feet smaller than a 14. So this is something that I'm stuck with, that I could never use these shoes. So the $45 is one thing. It was a total of, let's see if I get this right, 9 hours of driving to go get that shoe, 2 round trips of 4.5 hours, plus all the time at the market. So probably somewhere between 10 and 11 hours of our time with multiple people each time. So somewhere in the vicinity of 22 total hours of our time was invested in getting a pair of shoes that isn't even a hint of being a shoe for me or anyone that we know. So that's plus the $45. And 9 hours of driving, while the gas here is not outrageous, and that's not, like a full tank, it's a lot of gas. It's probably another $30 of gas. So it's all very frustrating that we put that much effort into something that they didn't even bother making the size of my foot. Like, there's only 2 things you do as a cobbler: measure the foot and put the materials together. I realize that the second part is generally the hard part, but it's pretty straightforward. If you make a shoe a different size than the foot of the person who's going to wear it, all other things are useless. It's the one thing you cannot get wrong. Everything else can be adapted. Oh, you wanted laces instead of, buckles? Well, we could change it, or you could just make do. But if it's the wrong size, there's no making do. Right? And if you are going to make a mistake, you make it too big, because you can put in insoles or not put in insoles and play with it a little bit. As long as it's too big, maybe it's too loose, you can do something, wear thicker socks. You can't do anything when your foot physically doesn't fit into the shoe. So this feels like people make mistakes, right? But as the one time we were getting a shoe made, and it was such a big deal that he's like, these are the biggest shoes I've ever made. And then he made one that's a completely normal size, not the size of my foot at all. You just put them next to each other and you're like, so clearly different size shoes. Because I'm wearing shoes that fit me all the time. So the second challenge we have coming up is we have been unable to find a tailor to take in my suit. Again, it's been a week since we bought the suit, and all the tailor shops here in Leon won't respond to us. It looks like our only hope is to run into Managua, and we only have a couple days before the wedding. Like, we're literally down to just a few days, and no tailor will respond to us, so we're not sure exactly what to do. But our window to get things done is getting very, very tight, and we found out that we are out all day on Friday. And today that I'm recording this is Tuesday, so we have a total of 48 hours to get everything figured out. Normally, you can't get tailoring done that fast. We have no idea what to do. My suit is nowhere close to the right size for me, and I don't have dress shoes. So this is getting really frustrating, trying to prepare for a wedding. We've had all this time to get ready for it, but no matter what we did, it just didn't come together. And we gave it a lot of time, like weeks, and we've been looking. It's not like we, waited and said, okay, let's go to the cobbler. No, it took weeks to look to find a cobbler. Once we finally found one, we went to them right away. So there's a lot of process to find things. So for this type of stuff, getting clothing made, our first experience here is very frustrating that there just aren't the resources for it. And that kind of makes sense, right? The majority of clothing here is hand-me-down from other countries, and so there's a ton of secondhand. And when you're buying first-hand clothing, it's not normally this type of clothing. This is not something you generally wear in the country. So when people are putting in an effort to get new clothing, more expensive clothing, it's normally to be fashionable, not to be formal. And formality is very rare here. So this is just, the entire process is something we would not see very commonly in Nicaragua. And when you have it like that, and a country that's relatively poor, the chances that you're going to have resources like cobblers and tailors gets really low. There's plenty of people who can mend things that are broken, but to create things that are new or to resize things that are the wrong size, you're getting into why don't you just sell it and buy something that's the right size instead of altering something that you already have. Thing is just the dynamic is very different, so we're struggling a lot with that. This is something that may be misleading to a lot of people, because if you're used to, say, Southeast Asia, they have a culture very strongly of making clothes there, of doing alterations. It's a thing. You go there and get a suit made. Paul just did that. He went there and got a suit made. Now, I did have someone in my comments say, hey, there's a tailor we really like, but they're hours away from us, and we don't know if they'll do this, but they do custom work and people have had it done, like that's really cool, and I hope to be able to take advantage of that someday. But right now, we really need a tailor in Leon, and there really isn't one, so it's a huge problem. All right, so now that our adventures in trying to find clothing is to the end of what can be discussed, we're going to talk about today's topic, which is blind capitalism in America and why America sees the rest of the world as so different, why it's so hard for people to understand things. So as people know, America really prides itself on its capitalism, and that's actually a pretty weird thing because there are many countries of the world that are just as capitalistic or even more so than the United States. The United States is on the capitalist side of the spectrum, but it is not super far to capitalistic. It's just kind of in the zone, right? But it talks about it so much, and it's really clear when you visit or spend time living in the United States that it's different than other countries. But I think why it's different, but all those places are still capitalistic, or capitalist, is important to understand. And that reason is, I believe, blind capitalism. Now, let me explain what I mean by that, because this pretty much explains a huge portion of the American financial and economic experience, and one that the rest of the world often doesn't understand. And Americans generally don't understand that the rest of the world isn't like this, or that there's an alternative that they're not aware of, so that when they look at other countries, it's really common to see non-blind capitalism, normal capitalism, and not realize that that's what capitalism typically looks like, and think, well, they're not capitalist because it's a system different than the United States, and since you know the United States is capitalist and this is different, well, that must be the answer. But that's not the case. It's America that's the outlier within the capitalist system. Now, before I get started, it's really important. This is not... Blind capitalism may feel like there's a negative connotation to it. There are negatives and pros to all different things, of course. It's not that there are no negatives to it, but that's not the point. The point is that this is a different way of approaching investments that really, truly defines the American experience in a way that I don't think Americans appreciate or often even understand because they think it is normal. And other people have absolutely no insight into this, not really. You might see it in movies and stuff and just think it's a neat Americanism, but not think anything more of it because they're not really familiar with it. That so heavily defines what it's like in the United States. So to explain what blind capitalism is, we need to establish some fundamentals. First of all, what does normal capitalism look like for an individual person? Typically, in a capitalist society, what it means is that a person will go out and be able to raise money, whether by saving for it or by asking other people to lend it to them or whatever, or get multiple friends together who all have money and start a business. This could be a restaurant, this could be a moving company, this could be anything you imagine, but starting that business based on having capital that you can invest, could be your own, could be someone else's, and starting a business and freely being able to run a business. This is the foundation of capitalism. In most countries, this exists in one form or another. There are exceptions, but they are extremely rare. The majority of the world is capitalist, at least to this fundamental degree. That is not something that should be surprising. It's hard to imagine how any place would function if you didn't have this level of capitalism. And there are, again, places that don't have it, and they function oddly compared to the rest of the world because they have to, right? It is not normal that you're not able to go out and say, let's say you're going down the street and you see a little hot dog stand, and you think, oh, that must be owned by the government and centrally managed. No, you don't think that. You think someone saved up enough money to get a hot dog cart, learned how to make hot dogs decently well, and now stands around on the street selling hot dogs because that's what they want to do with their money and time. You assume that somebody put effort into that, and they probably did. If you had a non-capitalist system, that means that person's hot dog cart is not something they own. It's got to be somehow owned by society. And when you have society own things like that, they're not very likely to start putting out hot dog carts. They might, but they're not very likely to. The way that you see the world ends up very differently from a completely non-capitalist society. So we don't tend to see them. And also Americans, because of their religious nature of their politics, not that their politics are associated with a religion, but that the politics in America are treated as a religion. Right. It is very similar to how they were in ancient Egypt, that Pharaoh was considered the god. Well, politics in the United States, while slightly different, and there is no clear godhead, there is very much a worship of founding fathers, of much like they are disciples or prophets. and the Constitution is treated like the Bible. Like there's a lot of things like that, and it comes from an association that the country was started by people who were following prophets and the Bible, and so this whole mechanism of life experience was applied to politics as well on a grand scale, and it grew up with the country, and the country pushed both real religion and politics as religion together. And so Americans have a tendency to see politics in a way that very few other people do in the modern world, and that tends to lead to a lot of weird things. All that said, one of the things that leads to is a belief that capitalism is an absolute that must be there, and that other things in government are somehow not capitalism. For example, many Americans know so little about socialism that they think capitalism and socialism are opposing concepts, which could or may not be the case, because really good socialism often depends on capitalism. Capitalism often really benefits from good socialism. The two are different types of things. While both do have some amount of aspects in the financial world, they can be complementary. They can also be adversarial. I'm not saying that they can't, but they are not directly related, whereas Americans often are taught that it is a spectrum, on one side being capitalist and on the other side being socialist, and then even farther to then associate capitalism with the right and socialism with the left, which doesn't make sense, as we already just established they're not on the same spectrum. So now we know most countries are capitalist. You can just assume basically anywhere you're going is going to be capitalist, including a lot of like the Middle East and places you may think that you know very little about. Rural parts of Africa, big city, Southeast Asia. Chances are you're going to run into capitalism everywhere, including places that we are taught are not at all capitalist, such as countries with a communist party in charge. There are communist countries that do not allow capitalism. They are the exception, not the rule, and you may argue that maybe that's not really not really communism, but something just using some pieces of communism, and that doesn't make it communist. And okay, there's a lot of, like, I get that, those are semantics, but you get the point that the point is not what is communism. The point is that capitalism pretty much rules the day almost everywhere, regardless of any other aspect of your politics. You can be a super right country, a super left country. You can be a super big country, a super small country. Chances are you have capitalism and you're using it every day. Now, when we're talking about that type of investing, it's really clear what's going on. A person owns a business and they probably work in it too. They may not, but they own it and they oversee it. They are the owners of the business. If they want the business to have certain business ideals, like they're going to work really hard at making lots of money, or they're not going to worry about making lots of money as long as they're not putting in too much effort, or they really want to be ecologically sound, or maybe they have some kind of other mission. Whatever, they have an owner who oversees those things and becomes directly involved with it. They know probably everything that's going on in the company, and if they don't, they know a lot of it, and they put their own personality onto the company, and the company generally becomes an extension of them. But very importantly, they know that they own the business, and they know what that entails. It's very visible. When you get onto a larger scale, let's say you had plenty of excess capital because the person we're just talking about had to work hard to open one business. But what if you did well with that, or you inherited money? It doesn't matter. You have a good chunk of money and you'd like to own another business, but you're not prepared to go out and open that business yourself. You're just going to buy something that already exists, or maybe someone has an idea and they're going to start up and you're just going to invest in it. You're going to put in all the money for that, or maybe you and a buddy are, and you're going to still be involved, oversee it, clearly own that business, but you may not be running it directly. It may be completely run by someone else. This is more or less, I'm very much doing a high level view, but basically what we call private investing or private equities. This is where you privately hold another company and it is an investment venture for you. Typically with private equity, you stay pretty involved with the business, but there are exceptions. I have worked with companies where their private equity holders are absolutely absent and the company just stole from them left and right because they knew they were absent, and all they had to do was pretend they were doing a good job, and the owners would just keep throwing money in because they had more money and it was a hobby for them. They wanted to be able to say they owned something, but that's an aside. That's private equity. And that also, for most people, is really easy to understand. And essentially, all countries have that. They may not call it private equity. It may not be a large market. You may not have millions of private equity investors that you can go out and pitch selling your company to, but they have private equity, whether it's just family money that's being pooled and someone's buying a business and everyone takes part in the profits or whatever. Private equity is pretty standard. Now, what is the alternative to that? Well, there's an in-between step, but we're going to work through this. So the way that most countries, when they want to have really large companies, because big companies, we'll use, for example, Microsoft, very large company, too large for any one person to own. That may sound like crazy, but there's definitely people who are big enough to own. Wait, no, some of the biggest, richest people in the world are more than one of them is one of the holders of Microsoft, and millions of other people hold Microsoft as well. So Microsoft is way larger than the richest people could possibly have if they owned the whole thing. So what do they have? Most people are aware of shares or stocks. The terms can basically be used synonymously here. When you issue stocks of your company, you're taking that company's ownership and breaking it up, much like we did with the private equity. When we had the private equity and I went in and bought a business, there was one stock and I owned it, basically. They don't actually do that, but that could be done that way. But if me and a buddy want to do it, then there's two shares of the stock, and we each own one, and we're half 50-50 owners of the business. We can talk to each other, make decisions together. Better to have a third person so that if you have disagreements, you have a way to break a tie, but that is an unrelated thing. Once you get larger, you can start issuing shares and selling them in tiny pieces. It's the same mechanism, just at a much more fine granularity and generally on a much larger scale. Let's say you issued 1,000 shares and 1,000 people each bought one. But every so often, someone would sell one, someone else would buy one. You might end up with 2 or 3 shares, so it's not an even distribution most of the time, but there's a lot of shares out there. Magnify that to where you may have millions of shares, and you start to see that there's just a lot of people involved. Typically, you have people go out and go to board meetings or go to owners' meetings, shareholders' meetings, and if you want to talk about topics with the business, you can vote on it and so forth. Now, let's talk about this for a second, because in the original example, let's say the person who started their own business, let's say it's a restaurant. If you start your own restaurant with your own money and there's no other investors and you want to go eat at that restaurant, it's very clear you just walk in and do anything you want. You own the restaurant. If you are one of 2 people who own a restaurant, chances are you can act that way as well. I am one of just a few people who own a restaurant, and we just walk in, any one of us, and do anything we want. We can have the keys to anywhere. No one's going to say no to us. We can open the cash register and take cash out if we want. The government doesn't like that, but no one in the business is going to stop us. We can access the computers. We can change the wiring. We can order specialty food. We don't have to pay whatever. We are owners. It is very straightforward. If we were to get up to 10 or 20 people, that starts getting a little bit awkward, because chances are someone's going to be eating in that restaurant, eating expensive food all the time. Someone else is going to be never going there, and they're not going to appreciate paying for the other person, because restaurants only make so much money. When you have 20 or 30 investors, one person taking way more than their share is potentially obnoxious to the others. So you start to see the problem already. Now imagine if you had millions of people who owned a business that is a restaurant. For example, McDonald's. Nearly 100,000, maybe 1 million Americans, I'm just making up numbers, but this is trying to be serious numbers, are shareholders in McDonald's. None of them are given the right to go to a McDonald's and get even a discount or special treatment in any way because they're a shareholder. And the majority of them are not aware that they're shareholders, but we'll get to that in a minute. So when you get larger and you start having normal shares in a large company, you stop acting naturally like an owner, even though you're as much an owner as anyone else. You own some slice of a larger company. This starts getting complicated because McDonald's does not act on your behalf. That small company, that single restaurant, let's say they didn't believe in using lettuce. They simply had a religious abhorrence of lettuce. Well, if the owner doesn't believe that lettuce should be sold, lettuce won't be sold. It'll never be discussed. They simply won't buy it. and that is that. When you get to 2 or 3 people, they might say, well, a lot of our customers are going to want lettuce. We need to talk about this. But if they decide not to sell it, they're not going to sell it. When you get to be a giant company like McDonald's, it doesn't matter how many of your shareholders say, I don't believe that lettuce should be sold here. Chances are, unless your customers don't want lettuce, you're going to sell lettuce, because either you're going to get outvoted by the rest of the base, or the law is going to step in with something called fiduciary responsibility, where basically as investors, you are required to have the company do the best thing in the interest of all investors, and the only thing that they share as a common interest is making money. There are a few ways around that. They're very hard to do, and they're extremely rare. So as you get larger, the idea that you know what a business is doing, that you have the right to go in and inspect it, the ability to get information about it, you can't sit down as a shareholder of McDonald's and have a conversation with the CEO or its board or really anyone else. You're not given that right. If you want to find out about what's going on at McDonald's, you have to read the public prospectus the same as everyone else. You're not given special treatment. A smaller company with shares, well, you might be. It depends. But once you get large enough to be what we call a publicly traded company, that means that the federally regulated stock markets are buying and selling or managing the buying and selling of those shares for the public, then you really give up those rights across the board. You are separated from the thing that you own, even if you own a huge portion of it. Now, if you were to be one of the richest people in the world and come up with somehow enough money to buy the majority of McDonald's, sure, that would change things, and you would be able to dictate that you could do certain things. Not anything, but many things. And you see that all the time. You see very rich people buying relatively large companies. They don't buy 100% of them. Normally, they buy a controlling portion, we say, and with a controlling portion, they can dictate a lot of policies, but they can't act completely crazy without facing lawsuits from the other shareholders over fiduciary responsibility. The CEOs and so forth cannot do what they're told to do by the shareholders if it's against the law, and they have to do fiduciary responsibility, which is try to make the most money for everyone. So it's pretty clear to see why we become disconnected from our money, but that's still not quite where we get with blind capitalism. In the United States, we don't have public pensions under normal circumstances. Many other countries do. The government handles your retirement. This is really common around the world. Americans don't realize that that's how it typically works. And I'm not saying that that's good or bad. It is simply different, right? So that's important. This is just a different mechanism, but it causes us to view the world differently. When you go to retire from, say, France, and you have a public pension, you know that the public is going to pay you a certain amount no matter what, and there's no investment. You don't have to manage it. You also have no control over it, none whatsoever. It is simply the government is using your tax dollars and giving something back at the end. You may like that or not like that. That's a different matter, but that there's no private ownership of a business over which you can complain or whatever is given. In the United States, the majority of retirement or investing of any type is done privately by individuals. But while you are absolutely legally allowed to go out and say, ooh, IBM, ooh, Microsoft, ooh, General Motors, and directly buy their shares off the stock market, it isn't very effective because the size of a purchase you need to make that cost effective to keep the overhead down is quite large. Not very many people can do that. There are fees every time you buy and sell, which most people feel they need to do much more often than they actually do. And so they worry about those things and so on and so forth. And we are taught very heavily that the one thing you always must do is diversify your investments, which is probably not actually correct financial advice. It doesn't meet risk standards. If you were looking at the risk numbers, you would do the opposite. And given that they're told to do that for the purpose of mitigating risk, means you have con artists involved once again. But that's a different topic. The important thing is that Americans, by and large, work with buying pools when it comes to shares, and you're of businesses, and you're familiar with these from terms like mutual funds, index funds, and so forth, IETs. These instruments, as they're called, take groups of companies. Let's just take a standard mutual fund example. You have a municipal fund. You have a mutual fund manager who takes the retirement or the investment income money of thousands of investors. So they're working with millions or hundreds of millions of dollars. They look at all the businesses that they can on the market, and using whatever evaluation techniques they decide to use, whether they're standard ones or some custom special sauce that they've come up with themselves, they try to determine which ones are going to overperform and which ones are going to underperform the analysis, and so where your best investment is. And the idea is that if you have a good mutual fund manager, that they will beat the market and you will make more money than if you just put money into those companies directly without really thinking them through. Whether or not that works or not is generally mathematically to be shown that it does not. Monkeys will perform just as well. But again, that's another aside. So the point is that you end up, say you're an investor, and in the original example, you were going to take $100,000 and use it to open a restaurant. In this example, you're going to take that same $100,000, but instead of putting it into your restaurant that you will control and oversee every day, you may not work there, but you may just oversee it. That's fine. You're going to take that $100,000 and put it into a mutual fund where someone else is going to divvy up that money and buy lots of different pieces of lots of different companies. Maybe just 2 or 3 companies, and maybe 2,000 or 3,000 companies, right? It's a very, very different animal. And so now you only own shares in a fund that owns shares in many companies. You don't have a very clear picture of what you hold of what company. And technically, you don't hold anything of any company. You only hold shares of the fund. It's not exactly the same thing. Now, as a fund holder, you generally have some small amount of say in what the fund can do, but in general, it's minimal, and you're really not given any ability to alter anything, more just to oversee it. It does depend on the fund. So now you have orders of separation. This person who started with their own restaurant knows everything. If they don't want to sell lettuce, they're just not going to sell it. Now these people don't even know whether they're going to their own restaurants or not, and they don't know if they're selling lettuce or not. They don't know if they've discussed it. They don't know who's in charge. They don't know anything. The person who now owns 0.00001% of McDonald's through this investment is generally unaware that they own that. And they certainly don't know which other things McDonald's has invested in. It goes on and on and on, that there's these layers of separation. And this is what starts making it blind. Americans tend to put money into investments without having any idea of how it's being used, and in many cases, even where it's going. They simply know that there is a fund of some sort or some buying group of things, and when that is accumulated, that it provides returns that are adequate for that person, or they project that they will be. And so that is pretty much what they end up doing. For example, I recommend quite often investing in an index fund, such as an S&P 500 index fund. They're one of the best performing things over the history of the market. It's where safe money tends to go. And whenever someone's saying, oh, you should go to gold for safety, it is always the S&P 500 that you should go to for safety. It is the thing that consistently performs the best over all time. For the same reason. So if you were ever thinking, oh, I'm worried, what do I do to protect myself? Well, all of history says index funds are what protects you, and things like gold have not historically. They may not be the worst performing. Gold is going to protect you against some other things, but not much, right? It's when you're becoming emotional, gold is where you run. When you're being logical, index funds is where you run, unless you really know what you're doing and investing in a company that you just have a lot of faith in or whatever. So what we wanted to say is you now have this concept where the majority, and it truly is the majority of all investing that is happening in America, the majority of all money going into the investment pool. And it's not just a little bit over 50%. It is wildly more than 50%. It could easily be 90 or 95% is money going into these pools. So the majority of large companies in America are owned in the majority by funds of some sort or another. They could be government funds that are simply protecting the public wealth. It could be private funds that are trying to enact some kind of change. They could be just regular retirement funds that could care less what they're investing in, and they're just trying to find good blends to protect their investors or whatever. But the point is that the majority of companies end up with no visible shareholders. So if you're the CEO of one of those companies, you have no idea who you're answering to. It's just a huge pool of hundreds of thousands of anonymous people. And if you're one of those hundreds of thousands of anonymous owners of that company, if you even know you hold any amount of that company, you generally are so many orders of separation from it that you have absolutely zero say in it. So these companies are being owned by owners who collectively have no voice or insight. Sounds like a certain political system. Or you have huge funds that are looking at it and don't have the interest of the investors beyond maybe monetary. And that's generally what it should be. But if you have desires, you want a business to act in a certain way, whether it's ethically or because you think there's a direction they need to go for the future, you generally don't have that voice. And people do this every day. They put their money into these investment funds blindly, and it does a great job at generating wealth. Now, what this does for the American experience is a couple things. One is it makes the concept of investing unique in America, that you have the idea that you can just take money at any time in any amount and put it into an investment pool, one that you're probably already a member of. Like, for example, I have a mutual fund, and whenever I have a spare $100, I can stash it into that mutual fund, and I don't have to think about it. I don't have to worry about the quantity. I can just I have 100, oh no, it's 150, whatever. I can just throw it into that fund. That fund will be a little bit bigger. I'll get a little bit bigger return. That's all I have to do. I don't have to think about it in any particular way. I don't have to know what that fund is doing. I should probably know how it's performing, but I don't need to know what it holds or what those things hold or how it's blending or anything like that. I only care that it's paying me what it's supposed to pay me, and that I can easily put money in, possibly easily take money out. That's it. It's very simple. That's how it works for me. That's how it works for the vast majority of Americans. And for the most Americans, it ends there. That's just how it works. The benefit to America as a country and as a society is that this makes it easy. It creates a frictionless process, frictionless process by which every member of society can take their money and keep it in the investment pool. And by doing that, you don't have to do anywhere nearly as well as an economy, because you have so much money going circularly through the investment system that companies have money to go out and try new things. They can grow, they can invest in other businesses, they can open new factories, they can put out more marketing, they can ship more things overseas, build more boats, whatever it is that they need to do, because every spare penny that exists in the economy gets put back into growing the economy. This is where America's strength comes from in its economic model. And this is what is surprising, that people expect other countries to somehow compete with this, when as a culture, every spare fund, and we say this in America, if you're putting money into a savings account, you're just throwing it away, because you should be getting the dividends you get from an index fund at a minimum, or try to get better. That mentality generally doesn't exist anywhere else in the world. And so when other people are getting excess funds here in Nicaragua, or maybe in Norway, you have an excess $5,000. What do you do with it? Well, typically you're going to hold it in a bank account, and that will protect you. And those people will worry about inflation, because as the inflation happens, that money in the bank account becomes worth less. But in America, if you have that money in a fund, the value of the fund goes up with inflation naturally, and you don't have to worry about inflation because you don't have cash. Inflation only negatively affects, generally, people with cash or cash-based assets. It also hits people with gold, but not too much, very minimally compared to people with just cash. So this tends to be a very big strength of the United States, that you have this economy that always has money to grow the economy. It is self-feeding at all times. And this is why the American economy constantly outpaces inflation, so that America keeps getting richer and richer. So many other countries don't know to do things like this, and they let their potential investment capital languish, and no one uses it, and it simply diminishes over time through global inflation. And that's why some countries actually get poorer over time rather than richer. They're not investing in themselves. There's exceptions. There's people who just get ravaged by war or drought or something. But in general, when you have a healthy everything else and you're just losing money over time, it's because you're not investing and you're letting your economy attrition out. Now, where is this potentially bad? How is this different? So if you were to come to a country like Nicaragua, yes, there is a stock market, but there's only maybe 10 companies that you can buy stocks in. There's no funds, of course, because there doesn't make any sense to be. If you want to split up your investing, you can do it manually if that's what you want to do. And who wants to do that? You know all the companies and what they're doing. You're going to invest in the one you want to invest in, or the two, whatever. So there isn't the need for this blind system. There's only these couple companies. Other than that, when people want to invest, and people certainly do, this is a capitalist country, they can go out and start a business if they want, or they can invest into an existing business. All those options exist. You can go start your own store, you can start a manufacturing facility, you can buy an existing one, and people do this every day. This is not like a hard thing, it's not just a theory, it is everyday life in Nicaragua. There's business everywhere, just like there is in the United States. Now, there's a few other things we talked about in a video about a year ago where the United States, just from a tax perspective, very heavily encourages larger companies as just the thing that they want to do. And Nicaragua really, from a tax perspective, encourages really small companies, but more of them. And that's what they want to do. So it's a different model that the United States targets through tax incentives, larger consolidation entities, and Nicaragua does the opposite. Just two different approaches to tackling the same thing of how do you want to tailor your investment trends. And it's only trends, because in both cases you're allowed to do whatever you want. So that makes the investment environment very different. In Nicaragua, if you're going to start a business, you generally need to raise enough money for the entire business. And if you need to raise more, you're going to be borrowing money from a family or something. You need to be really careful that you have access to enough money. In the United States, if you have a company that's doing okay but needs more money to survive, it has ways of raising tons of money if necessary, if they have a good business model. As long as they have a good business model, someone will come in generally and invest more money, because there is money to invest. Nicaragua, you just don't have that market, and that makes it really tough when you want to start something, especially if that something you want to start is a little bit larger, or you don't have access to enough funds to put them up yourself, so you're really relying on other people. There just isn't a good way to match up with those people. This creates a different thing, though. Now that we've determined that it's blind in the United States, we don't know what we're investing in, and that actually encourages us to invest more and faster, which is good, there are negatives to it. And the biggest one is that our visibility into what companies are doing, whether or not they're actually acting on our behalf, is pretty close to zero. We have no idea, even as the owners of companies, what they're doing. We don't know who's in charge. We don't know what decisions they're making. We don't know what's going on behind the scenes. You can't buy a share of Apple and go inspect its factories. You can't go look at its supply chain. This applies to every business you can think of. And so because you can't do that, you begin seeing your money as nothing but money. It's just numbers. Whereas in most of the rest of the world, you see your investment as an extension of yourself, and it goes out into the world and acts as a proxy on your behalf. So here in Nicaragua, if you're going to own a business, there's a really good chance that you are going to see, and other people are going to see as well, that company operating as you. If you own a restaurant and you make a really good meal and it's very expensive, people are going to perceive you as doing a good job of being very expensive. If you treat your customers terribly, it's going to reflect personally on you that you treated customers poorly. If whatever, you can see the trend here. It tends to be very personal. And even if the customers don't see it that way, what's more important is this is actually what's happening. The business is you, right? Now, maybe it's half you and half someone else, but in general, it is you, the owner, and it is just you behaving in a certain way. And I certainly know this from owning my own company for a quarter century. That company is an extension of me. And when people interact with the company, they think of it that way for sure. And the employees do as well. It's just natural that there is this, we're part of this entity that is this person. And you can think of that even in a larger corporate space, sometimes happening with, for example, Tesla. They have that feeling about Elon Musk. What we end up with at the end of the day is a fundamental difference in the entire ecosystems and culture of business within different countries. In the United States, typically, companies have their own personality. They become their own creatures with oversight by no one, other than getting sued by a group of shareholders who are alleging fiduciary breaches. They can pretty much act on their own accord, and they don't reflect any of their investors. At some point, a large group of investors may flee a certain company because it is doing something very publicly that they don't agree with, but it generally requires something very large, and it is extremely rare that that happens on any scale that is actually noticeable to the company. And when it does, generally anytime someone is fleeing, someone else is running towards it because someone likes what a company is doing and someone else dislikes what they're doing. And it actually, there's a little bit of strength to those who like if you do something really aggressive, you actually tend to get some benefits from investors from that, just the nature of the size of companies compared to the size of the economy. That is a different discussion as well. Because of this in America, companies are generally seen as being their own entities. People have opinions about them much as you would about people, and you think of them that way. When you think of Apple or General Motors or ExxonMobil, you don't think of them as certain investors and a reflection of them. You think of them as a reflection of the company itself and maybe the people who run that company, but those people are rarely the owners. So you're seeing something different, a mix of the employees, perhaps the board, the CEO, but not the actual people who own the company. In most countries, the average business is going to be visibly owned by someone. You may not know who that is, but there is a person, and companies are seen less as having their own personality, but having simply a reflection of the personality of the people who own them. This has important ramifications. Companies tend to act in other countries on behalf of their owners, for good or bad, but they act on behalf of a person. And in America, they tend to act on their own accord, not on behalf of any other person. And it creates a completely different system. I think that there's a big benefit to both. In America, the constant investment causes a huge amount of growth that you don't see other places, but it also causes a consumerism climate that is absolutely different than anywhere else. And you really, when people talk about consumerism in America, this is what's driving much of that under the hood, is this need for this growth because the money has to go somewhere to reinvest, and there aren't necessarily enough things to do that are going to have good returns on that money, so people need to keep consuming to keep the engine moving. In other countries, the benefit comes from companies tend to act more rationally and are able to be more predictable. They're able to do things beyond just create wealth that are in the interest of the people who own them. And they tend to act more on beneficial means to society. It is also very not beneficial that it is extremely hard for people in most countries to invest on the same scale as Americans, and the economy doesn't naturally grow itself in the same way, so it takes a lot more work to grow the overall economy. However, what you're able to do with different parts of the economy makes a lot more sense. So both ways have their benefits, both ways have their deficits. The point of this video is to explain why Americans and non-Americans tend to see the other region of the world, America versus not America, as weird and hard to grasp. And it's a very subtle but major component of life in both regions that the other is generally unaware of, and it reflects in everyday life. Americans think every moment, I can just put money into investments and it'll work for me. And people in the rest of the world generally think, I need to find a business in which to invest in. And so when you're investing in America, rarely do you oversee your money. If you're going to invest, you're just going to put it in and hope for the best. And you see this every day when you work as a business consultant like me. Corruption in businesses is unbelievable. It is the majority of the time you are able to make, and this is why we use the term politics over profits. The majority of the people working in any business make more money by stealing from their shareholders than they do by doing a good job and earning actual profits as a business. When you're in the rest of the world, that is very hard to have happen. And in America, it may sound like, how could that actually be the case on any scale? That doesn't make sense, because where would the money come from? But because there's so much reinvestment all the time, anything that gets taken gets reinvested. No matter where it goes back to reinvestment. And so there's this constant reinvestment. There's so much money reinvesting. We talked about this in gross domestic product, that a lot of times we see the same money flowing through over and over again. That is happening in America in these investment mechanisms. So we're seeing the same money. Someone puts in $1 here, then that pays back to another person over here, invests over here, gives back to this person, gives back to this person. And there is benefit to simply shuffling money around, in that it gets people to go out and work. But that's also contributing to why Americans work such crazy long hours and never take vacations, right? All the same mentality. And in the rest of the world, generally, you're going to find that when people invest in a business, they want to oversee that business. They want to make sure that it does a good job. And I think you're going to find there's a much better return on individual investments, but the overall economy struggles so much more, and the overall ability and lack of overhead to investing is so much harder that it doesn't necessarily, on an economic scale, make sense. On an individual investment basis, the non-American system is far stronger. The capitalism benefits of an individual investment are vastly better outside the United States as a whole. Again, you could have this in the U.S., you could have the other outside the U.S. They do overlap, but there's this huge cultural trend. But in America, you give up these benefits of having strong individual investments, but instead you invest at the economic level, sort of, and that's where the benefit. The general economy is so much stronger, so much bigger, that you can be a lot more looser or poor with individual investments, and it gets made up for by the strength of the overall economy. And that is why when in other countries, when they picture investing, it is, I'm going to save up and buy a farm. I'm going to save up and buy a store. I'm going to talk some of my friends into buying a car dealership. And in America, it is, I'm going to go play the stocks on Wall Street, and I'm going to, right, and you think about market cap and you think about stock value, whereas in most of the world, world, they're thinking about how much money they can get in dividends. How much is that company going to pay them in profits throughout the year? And in America, while we still think about that, we think about it much less. And we tend to think about share value. How if I spend $5 on a share of this company today, what can I sell it for tomorrow? We forget that the value of the company is, in theory, supposed to be what the company can do over time as far as making products and making good business. And we think, how much can we convince someone else to buy this from us for? And in many cases, there have been companies that never did a single thing, and their entire business was simply tricking investors into thinking there was some value, running it up, getting out, and then leaving someone holding all of those shares before someone found out that there's nothing beneath it, and it's known as the greatest fool game. And it's completely legal, and it is up to people to invest. If you were doing traditional non-American investment, you would never once fall for that, because you would look and say, there's no business here. What am I investing in? But in America, because you're investing in the idea of business most of the time, it's very easy to actually end up investing in something that doesn't even exist, and possibly making money at that, because so many other people will do it as well and can easily be tricked into thinking you paid too little for nothing. Thanks for joining me. Like and subscribe. Share on social media. Tell your friends about the show. I will see all of you tomorrow.